not the biggest expert on tax, but capital gains tax is effectively, you get taxed on the increase of an asset that you've sold. Okay? But it's only payable once you've realized that gain, so once you've sold the asset. So you're buying a property for $1 million. 5 years later, you're selling it for 2 million rand. You have made R1 million profit. Okay? The government is going to tax you on that profit. Now, depending on how much it is, there's different scales on how much it is. And it can depend, I don't want to quote percentages, but I mean, you can very easily go and work out your capital gains tax online. You go on Google and you say, or on ChatGPT, or on one of the websites, I think probably Uber, one of these things, and they can tell you what your capital gains tax will be. I also know that there are allowances in certain instances for if you're selling your personal residence, your primary residence, your home that you live in, that there's certain lower taxes if you do that versus if you were selling a property that is an investment property. There's also things where people do house flipping, where they buy a property, fix it up and sell it very quickly, or just buy it and sell it. There you can also run into issues sometimes with regards to how the tax is deemed. If you're trading on something, which flipping is kind of like trading with property, it's like buying something and quickly selling it, you can run into problems where they don't see it as capital gains tax. They will say, no, it's actually corporate tax or income tax or whatever it might be, and that's usually then a higher tax rate. So you've got to be careful about that. You've got to know, okay, I think it is the property's got to be registered in your name, I think, for more than a year, something like that. I don't know but you've got to get advice on that. You don't have to go to some tax expert. You can Google that stuff and it'll tell you.